Hey guys, it's Erica Neal. Today I wanted to get real about tax brackets and how your income and your marginal tax bracket actually impact your overall income. So I've heard this multiple times, which is, well, I don't want to make more money because then I go into the next tax bracket, which means I make less. That's not how it works, right? Like, yes, the more money we make, the more we pay in taxes, but that doesn't mean all of your income is taxed in that new bracket. So I just really wanted to give some insight into this. I feel like it's very misunderstood. So hopefully this will give you a little bit more clarity and understanding as far as, okay, well, where does my income fall? Where does that put me in a marginal tax rate versus an effective? So let's take a look at the brackets first. Okay, so these are the tax brackets for the 2019 year. And what we're looking at is you have single, married, okay, obviously, depends on how you file. There's also single head of household and all of those things. But the point is, the first $9,700 that you make as an individual, as a single filer, $9,700 is being taxed at 10%. Now, let's say you make $200,000. Well, obviously, 200,000 would fall in this range right here in the 32% range, but that does not mean that you were paying 32% on the full 200,000. Okay? So marginally, each one of these is a margin. So this is a margin, this is a margin, this is a margin, this is a margin. Each one of these tax rates is impacting only the dollar amount that falls into each margin. So again, if you make let's say you make $10,000, okay, you're going to pay 10% on the first 9,700. Okay. Now, the other $300 that you made will be taxed at 12%. Now, let's fast forward that. Let's say that you make 100,000. Okay, again, 97 is being charged at 10%, 39, all of the dollars between 9701 and 39,475, all of the dollars there paying 12%. And then anything, so basically between 84,201 all the way up to 100,000, only, what is that, about 16,000? Only that 16,000 is being calculated at the 24% tax bracket. Everything else is being charged in all of the lower brackets, depending on, obviously which dollar category it falls into. Same thing for married, right? If you guys are combining your income, depending on where your AGI, your adjusted gross income, wherever you fall, each section of your income is going to be divided up into the tax brackets. Now remember that now we're doing the standard deduction for non-business owners. So, the individual person working a W-2, if you're an individual, you're able to deduct $12,200. As a married couple, you're deducting 24,400. So that's something that immediately gets deducted from your income on top of any other federal deductions. So let's turn it over and actually look at the calculator and get an idea of, okay, well, how do these margins in my income actually determine how much I pay? Okay, we have a single person in 2019. We're going to assume no state tax. Obviously, we can factor that in later. I live in the great state of Texas where we have no state income tax. But don't let it fool you. We have property taxes to cover it. Anyway, so this single person, let's say they report 80,000, okay? But remember, single people, you're getting to deduct 12,200 right off the top. Now, if you're, getting if you're contributing into anything else, then, we can add that into additional income tax deductions, whatever. But the point is, in this scenario, this person is at 80,000, right? So we can see all the way up here, that's 22%. So coming back to this chart, 80,000 is going to put him right here in the 22% range, okay? So that's why we see all of this here, this 40, right, is being in the 22. So again, look at the different colors here. Remember, the first 9,700 of your 9,701 of your income is being charged at 10%. That's why it's in blue. Then we have anything between 9,701 and 34 and some change that's being taxed at the 12%. That's here in purple. So you have $29,000, 29,775 of your total income that falls into the 12%. Everything above that is what's falling into this green, and that's at the 22% tax bracket. So whenever we deduct the standard deduction of 12,000, that's bringing down how much is in the 22. Because again, we're not paying taxes on the 80 anymore. Okay, so that's going to be on what? 67.8. So we're paying taxes on 67.8. So only $28,000 of our income is being taxed at 22%. So let's look at this overall, because people are like, oh, well, what is this? What, marginal versus effective? Okay, marginal means your margin, the highest margin you're being taxed at, or this person here is being taxed at, is 22%. But effectively, down here, this $80,000 earner paid $10,774, down here in the bottom right hand corner, $10,774 in taxes. So let's do some calculations here just to kind of give you an idea. She makes $80,000, but we deducted 12,200. So that means that her adjusted gross income is going to be $67,800. She paid $10,774. So let's clear this. 10,774 divided by, what did I say? 67.8. 16. Okay. So approximately 16%. That means that I paid $10,774. That is 16% of my adjusted gross income, which was 67.8. So effectively, I paid 16% in taxes. That's where that, and really what we're looking up here is the federal income. Net income is 15.89. So that's the actual exact amount. So effectively, 15.89% of the money I made went to taxes. Now let's take a look and say, okay, well, 80,000, that gets her right up here. So let's pretend that she made, I don't know, 110. Oh, okay, now some of her income went into the 24% tax bracket. In fact, 25,000 of her income went into that tax bracket. But she pays 17,646. So the total income that the total amount that she paid towards taxes is 17,646. Coming back to the calculator, 110 minus the standard deduction means that her adjusted gross income is 97,800. Okay, so 97,800 in relation to the taxes divided by 97,800. So now she has effectively, yes, she made more. So her effective tax rate has gone up because now the top portion of her income is being taxed at the higher marginal rate of 24%. So yes, she's now paying 18% effectively on taxes. But let's look at this. She was making 110, paid 17,646 in taxes. So forgetting everything else, that still means net it's 92. Okay, that's still more, right? She made more, she paid more in taxes, but net 92,354 is still more than when she made 80,000 and only paid 10,000 in taxes. Okay, so I just want to help people get over this. I am afraid to make more money because I'm going to pay more in taxes. Okay, if you're paying more in taxes, number one, that means you're not doing real estate, but that's another conversation. But number two, if you're paying more in taxes, that means that you made more. So it's not a bad thing, okay? Same is going to go for married people. So if we look at this, 2019 for a married person, All right. And so combined, let's say, you know, you guys are making 175. I don't know. It doesn't matter. But you're getting to deduct 24,400. So right off the top, here's what's cool. If we did not have the standard deduction, then there would be almost $6,600 being taxed at 24. But thanks to the standard deduction, you're not in the 24 at all. You're all of the top part of your income, the highest marginal tax bracket that you're in is the 22%. Now, effectively, you're paying 16.5. Okay, so just understand here what the difference is between effective tax rate, which is what is affecting your bottom dollar, how much actually impacted you, versus marginally, which are the actual brackets, like which margin of income do you fall into. So these are just some, you know, examples helping people get over, you know, paying more in taxes because you earn more. Right. Like, I mean, I don't ever get excited to send a check to Uncle Sam. I will not say that. But two things. Number one, don't be afraid to make more money. And number two, the road to true prosperity and wealth, and, you know, almost every millionaire, billionaire in the entire world utilizes real estate because of the tax strategies and the benefits that are there alongside of it. So imagine making, let's say, 200,000, but none of it being taxed because you're able to take advantage of depreciation. Where if you have a day job, let's say you're making 75,000 at your day job, you're a single person, okay, and you're deducting 12,200. Okay, so effectively you're paying $9,600 in interest. I'm sorry, in taxes, but you have an additional 10, 20, 30. You might have 50 or 100 grand coming in passively from real estate investing, but you're not having to pay any taxes on that because of depreciation. So just a couple of things to think about. Hopefully this gives, you know, I'm a visual person, so hopefully these blocks will give you a better idea of what amount of your income is actually being, you know, taken away in the form of taxes. But if you have questions, of course, you know, feel free to let us know. All right, guys, I hope that was helpful. Again, I want people to be encouraged to make more money and go out there, but I want to do so in a way that we are making wise decisions. Understanding taxes and how they impact you is so powerful. The tax code, I read something that said like the Bible was 700,000 words and the new tax code is like 1.4 million or something. Anyway, my point is the tax code is insanely difficult to understand and it's way too long and lengthy. So don't try to get in the weeds of understanding every little, you know, every little sentence. That's what you have tax professionals for. By the way, that's not me. I am not a tax professional. I just know enough to be dangerous. But I do know that when you make more and falling into a higher tax bracket does not mean that it's hurting you or your bottom line. But if you really want to increase that bottom line, again, there are tax efficient strategies that we can help you with. And as always, you can message me, give me a call, or you can go to infinityinvestmentstrategies.com and click the link. There's a schedule button right there. You can look at our calendar and schedule some time on there that works best for you. And we look forward to talking to you soon.